You go back to the 2002 lows. In that period, gold was just above 250. It went to 1920 by 2011. Okay. So those were like, if you did it twice in the last 50 years, you could do it again. And all you'd be doing is reflective of those ratio scale moves. So gold got to $8,000 from its 2015 low, which was $1,050. So that would just be really replicating the ratio move of those two bull markets, which existed under conditions that aren't as dangerous economically and monetarily speaking as they are now. Now, if we're right about the bond market, and I think we are, failing in a miserable way over the next year, especially, not over the next few months, sometime in 2025, when it starts to fail, and the perception is, especially about U.S. debt, because we're the one with the biggest bubble, remember. So when it starts to break, we're going to have a lot of economic pain. Government's going to want to spend. Of course, I don't know who's going to be president, but almost regardless, you can have that crisis. And it's not, frankly, not the fault of whoever becomes the next president, because it was a crisis building for decades. And that will unleash gold in a way that could vastly beat the eightfold moves. Now, when we look at silver, and we looked at that ratio I talked about, where let's say at 2% of the price of gold, which occurred in 21 of the past 50 years, okay? If silver went to 2% of the price of gold, and gold went to 8,000, well, what's that, $160 an ounce, okay? And if gold went beyond that, what if silver went to 3% the price of gold, which it did in the 2011 bull? Just a couple $100 an ounce. So projecting where they might go right now is difficult. I can technically see certain levels above that might be pause stops on the way, but not tops. Like we think right now that gold, the next surge could carry up close to 3,200. Well, if silver happened to match that, but went up to 2% of the price of gold at that time, silver would be in the 60s. And we think this next surge in silver, get through the recent congestive action up at 32 to 33 area. You get up through that stuff. In fact, we got some trigger numbers just below 32 right now that say you're going through it. You get through that, I think we're going to blast out the dual highs of $50 that occurred, decades ago and also in 2011. I think those dual highs will come out with a whoosh. And somewhere on the other side of that, finally, silver will be temporarily exhausted after blowing the stops, so to speak. But ultimately, I don't think this surge we're about to see is any top. I think it's just the next stage. These bigger events happening, the unfolding of the stock market bear, which creates panic on the part of central banks, et cetera, that's going to further fuel the monetary metals.
And then I'd imagine go into the miners, because they've sort of been extremely unloved over the past few years, and many people link that to international central banks buying precious metals, but Western investors selling precious metals and the miners. So I think that's what a lot of people join in.
That'll be a gush, when they suddenly say, "Oh my God, I missed it," But already some major asset managers, and Stanley Druckenmiller back in February, for example, I cite him all the time because he was probably the first. He dumped a bunch of very big name tech stocks and bought Newmont.